Elon Musk does not sell cars. He does not sell rockets. He does not even sell technology. He sells belief. Belief that the future will arrive faster than cash flows can justify. Belief that losses today are irrelevant compared to dominance tomorrow. Belief that one individual can bend capital markets through narrative alone. And the strangest part is not that people buy it, it's that the system rewards it. This topic matters because belief has quietly become one of the most valuable assets in modern capitalism. Not belief in a religious sense. Belief in outcomes that have not happened yet, but are already priced as if they have. Elon Musk sits at the center of this shift, not because he is the only one doing it, but because he is the most extreme, most visible, and most successful example of it. Trillions of dollars in market value have been created and defended without traditional profit logic. Entire portfolios rise or fall not on earnings, but on whether belief holds. If you are an investor, the risk is obvious. If belief breaks, valuation collapses faster than fundamentals can save it. If you are a founder, the lesson is dangerous. Narrative can accelerate growth, but it can also distort discipline. If you are a decision maker, this forces an uncomfortable question. Are markets still pricing businesses, or are they pricing faith? Because once belief replaces cash flow as the anchor, volatility is no longer a bug. It becomes the mechanism. And if you don't understand how belief is being monetized, you're not early. You're exposed. For most of modern financial history, valuation rested on a few stable pillars: revenue, profit, cash flow, assets, time. Narrative existed, but it was secondary. A multiplier, not the foundation. Then technology compressed time. Software scaled without factories. Platforms grew without inventory. Networks formed faster than regulation could react. Suddenly, the future mattered more than the present. Discounted cash flow models began leaning heavily on assumptions. Assumptions quietly became beliefs. Beliefs became consensus. This shift didn't start with Elon Musk, but he mastered it. Tesla, SpaceX, Neuralink, the Boring Company. These are not just companies. They are vessels for future dominance. Each one asks the same question of capital markets. What if we win everything? Not some share, not a niche. Everything: transportation, energy, space, infrastructure, human cognition. Traditional valuation models struggle here because they require limits, margins, market size, competition. Musk's narratives dissolve those limits. The framing is never incremental improvement. It's inevitability. And once inevitability enters the conversation, patience replaces scrutiny. Losses are tolerated. Delays are reframed. Risk becomes visionary courage. Contextually, this happens in an era where capital is abundant, information is instant, and attention is scarce. Belief fills the gap, because belief is faster than proof, cheaper than certainty, and far more scalable than truth. This episode is not about whether Musk is right or wrong. It's about understanding the mechanics of how belief itself became the product. The dominant idea is simple, but unsettling. Elon Musk's companies are not valued on what they earn. They are valued on what people believe they will eventually control. Let's start with Tesla. For years, Tesla's market capitalization exceeded that of legacy automakers combined, despite producing a fraction of the vehicles and a fraction of the profit. This wasn't a miscalculation. It was a reframing. Tesla was never positioned as a car company. It was an energy platform, a software company, an autonomous network, a robotics future. Each layer expanded the story. Each expansion justified a higher valuation multiple. When margins compressed, the narrative shifted to autonomy. When autonomy stalled, it shifted to AI. When AI needed time, it shifted to robots. This is not deception, it's sequencing. Belief doesn't require immediate delivery. It requires momentum. Markets didn't ask, is this cash flow real? They asked, is everyone else still believing? That distinction matters, because once belief becomes the pricing mechanism, Valuation stops being anchored to fundamentals and starts being anchored to consensus psychology. Here's the mini twist most people miss. Belief-based valuation is not irrational. It's strategic. In a world where technological dominance creates winner-take-most outcomes, early belief functions like a call option on monopoly. You're not buying profits, you're buying optionality. Optionality on scale, on regulation bending, on competitors failing, on physics eventually cooperating. Musk understands this deeply. Every bold claim is not about accuracy, it's about expanding the probability space. Mars colonization doesn't need to happen soon. It needs to feel possible. Full self-driving doesn't need to be solved now. It needs to feel inevitable. Once investors internalize inevitability, time stops being a constraint. And time is where losses hide. Capital markets reward this because belief accelerates capital inflow. Higher valuation enables cheaper capital. Cheaper capital enables survival through inefficiency. Survival enables eventual dominance. This is belief as a weapon, not against competitors, but against time itself. Traditional firms must earn their way forward quarter by quarter. Musk's firms borrow the future and spend it today. As long as belief holds, the system feeds itself. Now contrast this with a different philosophy of capital. Warren Buffett. Buffett sells certainty, not belief. He avoids narratives that require perfect execution. He prefers businesses where time works in his favor, not against him. Cash flow is not optional. Profit is not deferred. Dominance is proven, not projected. Buffett's model is slower, more conservative, less exciting. But it is resilient. The trade-off is clear. Musk's model maximizes upside under belief stability. Buffett's model minimizes downside under belief collapse. Musk operates in industries where scale rewrites the rules. Buffett operates where rules barely change. Musk challenges physics, regulation, and incumbents simultaneously. Buffett avoids all three. Neither is wrong. They are optimized for different worlds. The danger comes when investors confuse the models. Belief-based valuation demands constant narrative reinforcement. Silence is decay. Doubt is contagion. Cash flow-based valuation compounds quietly. It doesn't need attention, it doesn't need faith. The market today increasingly favors the Musk model, especially in tech. Why? Because attention moves faster than earnings. Because capital seeks asymmetry. Because stories travel better than spreadsheets. But belief is fragile. It cannot be stress-tested. It cannot be hedged. It cannot be insured. Once belief cracks, repricing is violent. This is the trade-off investors rarely price correctly. They enjoy the upside of belief without respecting its expiration risk. If the belief model works, the rewards are historic. Capital concentrates. Winners dominate entire sectors. Late entrants are irrelevant. Markets evolve to reward vision over verification. Entrepreneurs become storytellers in chief. Execution becomes secondary to narrative control. But if the model fails, the consequences are just as large. Capital misallocation lingers for years. Productive alternatives are starved. Public trust erodes. When belief collapses, it doesn't fade, it snaps. Valuations compress faster than businesses can adapt. Employees pay the price. Retail investors absorb the shock. Structurally, capitalism shifts from stewardship to speculation. Long-term planning becomes difficult. Short-term narrative becomes dominant. This is not inherently evil, but it is unstable. Belief accelerates progress until it doesn't. And when it stops working, it exposes how much of the system was built on assumption rather than output. Here is the unresolved tension. Belief has always driven progress. Every great infrastructure project began as a promise. Every breakthrough required faith before proof. But belief used to be constrained by time and scarcity. Today, it is amplified by capital markets, social media, and global attention. Elon Musk is not an anomaly. He is a signal. A signal that markets are no longer asking, "What is this worth today?" They are asking, "What could this become if nothing stops it?" That question is powerful and dangerous, because eventually belief meets reality. The only unknown is when. And who is still holding when it happens? And that question remains unanswered.